Investing for beginners, what nobody explains clearly. A lot of people quietly believe investing is only for wealthy people, financial experts, people who understand complicated charts, or people who already have large amounts of money. And honestly, that belief stops many people from ever participating at all. Because investing often gets presented in ways that feel intimidating, overly technical, emotionally overwhelming, or disconnected from ordinary life. But at its core, investing is actually a much simpler concept than many people realize. Welcome to Nobody Told Us This YouTube channel, where we explore the hidden patterns behind money, work, opportunity, and modern life. And today, we're going to break investing down simply and calmly for beginners, not as hype, not as gambling, not as get rich quick, but as a long-term system many ordinary people quietly use to try building greater financial stability over time. What investing actually is. At the simplest level, investing means putting money into something with the hope that it grows in value over time. That could include stocks, bonds, index funds, businesses, real estate, retirement accounts, or other assets designed to potentially grow long-term. Now, importantly, investing is different from simply saving money. Savings are often designed for short-term stability, emergencies, or nearby financial goals. Investing is generally associated more with long-term growth. That distinction matters because when people invest, they are usually trying to allow money to grow gradually over time instead of only sitting still. One reason investing feels intimidating is because financial language can sound extremely unfamiliar at first. People hear terms like portfolio, index fund, dividends, asset allocation, compound growth, market volatility, or retirement accounts, and immediately feel overwhelmed. That is understandable, especially if nobody explained these systems clearly growing up. Another reason investing feels intimidating is because modern media often presents investing as fast-moving, high-risk, or emotionally dramatic. Constant headlines, market crashes, panic, predictions, urgency, fear, and honestly, that environment can make investing feel much more complicated than it needs to feel for many beginners. One important thing many beginners do not realize is that investing is often less about perfection and more about long-term participation. Many long-term investors are not predicting markets constantly, trading every day, or reacting emotionally to every headline. Some people simply build long-term habits around consistency, automation, retirement contributions, diversification, and repeated participation over many years. That is important because long-term investing often behaves more like gardening than gambling. Growth may appear slow initially, but over long periods of time, consistency can compound quietly. One of the most powerful parts of investing is time, because time allows growth, compounding, and repeated contributions to build on themselves gradually over many years. This is why many financial conversations emphasize starting early when possible. Not because people need to become wealthy immediately, but because long-term consistency and time can work together powerfully over decades. And importantly, people do not need to start perfectly. Many people begin small. The larger lesson is often simply starting, learning, and building understanding gradually over time. Now, importantly, investing still involves risk. Markets move up and down, economic conditions change, values fluctuate, and nobody can guarantee perfect outcomes. That is very important to understand. This video is not financial advice. It is educational conversation designed to help beginners understand investing more clearly. Because many people avoid learning entirely simply because the subject feels intimidating. And honestly, understanding basic financial systems is often better than remaining completely disconnected from them out of fear. Now let's talk practically for a moment, because many people want to know, what can beginners actually do? For example, here are a few simple financial systems many long-term investors use to support consistency over time. Automatic retirement contributions, scheduled investing dates, separate savings accounts, predetermined budgeting systems, long-term investing plans, contribution increase schedules after raises, or emergency funds. These types of systems can help reduce emotionally reactive decision making by creating more structure, consistency, and long-term financial awareness over time. Another important principle many beginners benefit from is learning gradually instead of trying to master everything immediately. People do not need to become financial experts overnight. Even understanding compound growth, retirement accounts, market behavior, basic diversification, or emotional investing habits can significantly improve long-term financial awareness over time. And honestly, many people become more financially confident simply because they finally begin understanding concepts that previously felt mysterious. Why lower income workers often feel left out of investing conversations. This is another important conversation. Many people assume investing only matters once someone already becomes wealthy. But often, investing is one of the systems people gradually use while trying to improve long-term financial stability over time. Now, obviously, financial pressure is real. Housing costs, debt, healthcare, family responsibilities, and everyday expenses matter enormously. And some people may need to focus on stabilization before investing aggressively. That is understandable. But many people are never shown that investing can begin gradually. Some people start very small. The bigger lesson is often psychological, understanding that financial participation is not reserved only for people who already feel financially perfect. And honestly, that mindset shift alone can become very important long term. One thing many people never discuss enough is that investing is also emotional, because money itself is emotional. Fear, stress, scarcity, comparison, urgency, financial insecurity. Those emotions affect decision-making constantly. That is one reason many experienced investors focus heavily on consistency, automation, long-term thinking, and reducing emotional overreaction. Not because emotions disappear, but because emotional decisions made repeatedly during stressful moments can become expensive over time. And honestly, some of the strongest financial systems are often designed specifically to reduce emotional chaos. The deeper lesson here is not everyone should become obsessed with investing. The deeper lesson is understanding that investing is one of many long-term financial systems people can gradually learn about and potentially use over time, because many people were never taught how money grows, how long-term systems work, or how consistency quietly compounds. And when people finally begin understanding those systems, investing often becomes much less intimidating psychologically. That matters, because fear and confusion stop many people from learning long before money itself ever does. One of the biggest themes on this channel is that modern life becomes easier to navigate when people understand the systems quietly shaping it. And investing is one of those systems. Not because investing guarantees wealth, not because money solves every problem, but because understanding financial systems can create awareness, confidence, long-term thinking, and potentially more options over time. And honestly, many people are far more capable of learning this world than they currently believe. And if you enjoy conversations about money, financial psychology, modern work, investing behavior, and understanding how long-term stability is quietly built, make sure to like, subscribe, share, and support the channel. This is Nobody Told Us This YouTube channel, where we explore the patterns behind money, work, opportunity, and modern life. And honestly, a lot of people were never taught these systems clearly in the first place.